and I'm here on behalf of Osborne Training, and I'm here to give you a basic introduction into double entry and the concept of DEADCLIC. So, hi Karen, hi Samuel, good to see you, welcome. So, let's take a look at the objectives for this short unit today. So our first objective is we're going to look at the 6 basic transaction types that you can be expected to do in bookkeeping and on this exam specifically. And then we're going to look at the debits and credits, because this is where students really struggle. They say, should I debit this account? Should I credit this account? So we're going to give you a little tip to help you really master the concept of debits and credits. All right? So please make sure you have a piece of paper to take some notes, and let's begin. So, in bookkeeping and accounting, we've got 6 major types of transactions that we tend to deal with on a day-to-day basis. So the first type of transaction we have is an assets transaction. And assets are basically things that are owned by a business. So this could be buildings, machinery, cash, for example, is an asset. So if you have money, that's a good thing. Receivables. If someone owes you money, that's an asset, isn't it? Because you're going to be getting money in the future. So that's the first type of the 6 main transactions that we have. All right. Okay, so I see Samuel's got a question. Is the bank balance also an asset? Well, it depends. Depends on what side it is, if it's debit or credits, all right? So if in our accounts, if it says it's a debit, that's a good thing, all right? That means we have an asset. But if in our books it says we have a credit, it's a liability. All right, so that's not. But we have to be very careful that from the bank's perspective, we switch it around. So if we've got a credit balance, that's an asset for us. If our bank balance in our bank statements says a debit, then we owe them money. All right, so we always have to be a bit careful with that. You have to see from whose perspective it is. If it's from our perspective, if it's a debit, it's good. If it's from the bank's perspective, if our bank balance says debit, it's actually a bad thing. Okay, no problem. So the next type of transaction type we have is what is known as a liability. So these are things that are owed by the business. So if we owe someone money, that's a liability. All right? So we have, for example, debt. So, for example, if we take out a loan, that's a debt. So that's a liability. Or payables. We've purchased something from someone on credit, and we owe them money. So that would be classified as a liability. So the third type of transaction that we have are what are known as capital transactions, and this is the amount owed by a business to its owner. So this could be, for example, the money that they've initially put into the business to start the business, or whenever you make a profit, the profit goes towards the capital, because that's money, the profit is money that's owed to the owner of the business. Now that's very simplified, but in later chapters we'll go into a bit more detail in that. So the fourth type we have are drawings. So this is where the owner actually takes money or goods out of the business. All right. So this reduces the capital amount. So if I take £500 from my business, my capital amount is going to go down by £500. But we'll look at that once again in a few minutes. The fifth type we have is income. So this is good. This is money. This is money coming into our business, and it's also known as revenue. All right. This can be from various means. You know, we could have sales, but let's say we're a business that has lots of different types of things. We could have rental income. We can have lots of things. So this is another type of transaction that we deal with quite a lot. And the not so good thing, expenses. So this could be wages, you know, if you paid rent on your building. Right? These are also known as operating costs. So these 6 things are the main transactions that we use when we have bookkeeping. Right? Now, there are other ones, but we don't really need to worry about that at this level. All right? So are there any questions before we move on to how to do the bookkeeping? Okay, Karen's fine? Okay, very good. Okay, so when we talk about double entry bookkeeping, the dual effect it's called. So that one account's going to change and another account's going to change. So every transaction that we have under double entry bookkeeping will affect 2 accounts. So let's take an example here. So let's say we have a cash sale. So let's say we're selling desks to someone. So we have a cash sale of £1,000. So there are two accounts that are going to be affected by this. So first, we have cash. We have cash coming into our business. So cash is an asset, if you remember I said before. So that's going to increase by £1,000. And our sales, which is considered income, will also increase by £1,000. So you see two accounts are being affected. It's called the dual effect. But let's look on the other hand if we have a credit sale. So we sell something to someone, but they haven't paid us yet, or they'll pay us in maybe 30 days' time. So the sales, which is classed as income, will increase, and we have an account called receivables. So this means people owe us money. That's an asset. That will increase as well. So you see here, there's always two effects. Now, the problem here comes for students when they think, well, what's a debit and what's a credit? All right, so which account do I debit and which account do I credit? Well, we've got a very simple way for you to remember this. We've got the concept called DEADCLIC. So this is what's known as a mnemonic, and this is to help you remember to debit or credit an account. So you have to remember, debits increase, first of all, expenses. So if we have rental expense, we debit the rental expense account because that's going to increase our expense. Assets. So let's imagine we buy a computer, all right? So when we buy the computer, we debit the asset account, so that increases the assets. And the strange one is whenever there's drawings. So when there's drawings, we debit it as well, and because it's technically, well, I don't want to say an expense, but it's lowering capital, right? So that's why, right? Now, on the other hand, we've got what are called the credit side. So this is the click of DEADCLIC. So whenever we have a credit, we're increasing a liability, all right? So, for example, if we take a loan, all right, that's a liability, we're increasing it. And now this is the one that really throws a lot of students, income, all right? Whenever we have any income, we credit the income account. We don't debit it. So a lot of students make that mistake. And finally, we credit to increase capital. So whenever somebody puts money into the business, we credit the capital account. Now, we can also use DEADCLIC to talk about reducing. So if we reduce these accounts, you just switch. All right? So if we're trying to reduce capital, we debit it. All right? If we want to reduce income, we debit income. If we want to reduce liabilities, we debit liabilities. Okay? So Samuel's got a question? When borrowing money, we debit. Okay, so we have to ask ourselves, when we borrow money, all right, we have the liability of the bank loan, all right, but what's coming into our business? Cash. All right, so we debit the bank account or cash account, depending on what it is. Very good question. You're thinking of the dual effect. All right, so we have the liability of the bank loan, all right, and we've got the debit side because we're increasing an asset of the cash. Very good question. All right? Okay, no problem. So let's take a quick example, look at some quick examples of this so we can give it a practice, and then in the next lesson we'll look at some exam standard questions. But let's imagine this. So we have a sole trader and they're starting a business, and so they're injecting capital of £1,000 into the business. So we're going to need a debit and a credit. So first of all, we have to think of what would be the debit side. Well, if we're putting cash into the business, all right, that's an asset coming into the business, so our assets are actually going up. So we look here, we debit the cash. So we've got cash coming into the business. Now we can't just have a one-sided entry, it's called. We can't just have the debit. We also have to think about the other effects. So because this is capital, all right, and if you remember from DEADCLIC, to increase capital, we credit it. So we have to debit the cash, and we have to credit the capital account, and then we have our two entries, so it'll be fine. If we only do one entry, we'll have a lot of problems and our books won't balance. Okay, so the next example we have here is we're paying a supplier. So we owe someone money, and we're paying that money off. So we have to think of the two things that are going to be affected by this. Well, first of all, if we owe someone money, that is a liability, right? So we're going to be reducing the liability, all right? And we also have to think if we're paying out money, we're reducing our cash, and cash is an asset. So the double entry for that would be we debit the supplier. Because if you remember on the DEADCLIC, to increase a liability, we credit it. Or we're doing the opposite. We're lowering the liability, so we debit the supplier. Now, cash is leaving our account, all right, so we're reducing in our assets. So if you remember under DEADCLIC, to increase an asset, you debit it. So to do the opposite, you credit it. So you're crediting cash. Right. So finally, let's take a look at this final example of where we buy goods from a supplier on credit. So we've got to think about the two things that are going to be affected. So we've got goods coming into our business. So what are goods? Goods are assets. So our assets are going up, and we also have to think we now owe someone money. So our liabilities are going to go up. Right? So let's take a look here at the entry. So we debit inventory because inventory is an asset, all right? Because that increases it. Because it increases it by the £1,500 of the goods we have. But now we have the liability as well. So we have to credit the supplier with the £1,500 in order to have our double entry. All right? So those are just three quick examples that we can take a look at. But are there any questions? Yeah, it does, because I must admit, when I was studying long time ago, double entry bookkeeping was a foreign language to me. But if you just think about the dual nature of the transactions, and a good tip, this is Neil's special tip, think about the cash book, all right? Because that's always a good way to think about it. Because we debit when cash comes in, and we credit when cash goes out, and then we need a corresponding entry. So if you're really stuck and you don't know, think about the cash book. And if your cash is coming in, you debit it, so you're going to need a credit. If cash is going out, you're going to credit cash, and you need to do a debit to the corresponding thing. That's kind of a little tip that I used to use, and believe me, I had to use it a few times when I took my exams as well, many moons ago. All right? Samuel's got a question as well. Yeah, it's not that hard. You just have to, my suggestion is when you start doing double entry bookkeeping, think about it like a foreign language. And with foreign languages, you just have to practice a lot and just kind of, do a bit of rote memorization just to remember the entries. And once you get it, you'll literally just be able to recite the entries from memory, and it just becomes automatic. All right? Well, thank you very much. Remember, we need a lot of practice with bookkeeping. These are just very simple examples, all right? You're going to need to do a lot of practice. We have many courses that can help you on this, all right? We've got this course here, and we've got other courses if you're interested in bookkeeping. And we're always here to help you if you need anything. So I thank you for your attendance.